All right. Well, good morning, everybody. Welcome to Stock Analysis Fridays. We're going to get started in about a minute or two. And so just hang tight. Great to have you here, and we'll have a great day today. All right, let me just test the audio here. It looks before we get going. Looks like getting a little bit feedback from you all saying the audio is garbled. So let me just make sure that's working okay. So is it still garbled? Testing 1, 2, 3, testing. Okay, how about now? How about now? Is it better? Testing, 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 testing. Let me know if that's better. Okay, let's go with that then. All right, well, welcome to Stock Analysis Fridays. Great to have everybody here. And of course, there's a lot to talk about. There's been trouble in the crypto market. You know, we have the FTX filing for bankruptcy and all that mess that caused trouble on crypto selling off this week. So quite a bit to cover. All right, well, let's get going. I got a few administrational things I have to cover, of course. And one of those, of course, is the risks involved in trading. And like I always say, without that risk, there is no opportunity. So the two really go hand in hand. Just be sure that you're trading with money you can afford to risk, and understand that when we invest or trade in the financial markets, or any market for that standpoint, that there is a possibility of losing some or all your money trading the market. So make sure that you understand that past performance doesn't guarantee future performance and all that kind of good stuff. And then finally, know how to do risk control. All right, always trade with money you can afford to risk. And if you need help with risk control, I've got a great book on money management for traders, which is that second book from the right in a green colored outline there. That is a great book, and it's very concise, very inexpensive. I think it's like $15 on Amazon. And it will get you up and running with a good, solid money management program. If you do want a deeper dive and go into the risk of ruin tables and all that kind of good stuff, my book on the far left called A Trader's Money Management System would be a book for you on that. Also, too, on the book on the far right, The Art of Trading, that's our brand new book coming out in the spring of 2023. And that's going to be an updated second edition of our famous Art of Trading book that came back in 2008. So we've been around the block a long time. A lot of these books have been on for sale for quite some time on Amazon and have always done real well. We also have a bunch of software tools that we use. You know, like I always say, you can't trade the markets without the right tools. And in our software box, so to speak, we have charting software, which is all the software on the column on the top. We have in the column in the middle all our scanners that tells us how to find markets. And then our software at the bottom, of course, is all about risk control. You have to have good risk control in order to be successful in this business. In any case, I'll put some links up here when I post the recording if you want to learn more about our books and our software tools. And then finally, please like, subscribe, and share to this channel. The more people we get coming, the more stocks we can look up. And the more stocks we look up, the more opportunities we can find. So again, that's kind of what we're all about here. One of the interesting things about this Stock Analysis Friday is basically initially it was going to be to help you guys out. You know, you bring a couple stocks here. We tell you what, you know, where your stop should be, what we think is going to happen. But what really developed is it almost became like a stock picking service, because if everybody brings a few stocks, by the time we're in the session, we usually can uncover quite a few good ones, and maybe you weren't aware of those. And so you can add those to your list of what you can actively trade. And then usually at the end, what I usually do is go to the intraday timeframes. You know, we're big day traders on the MES and the MNQ and all the micros on the futures markets. I usually turn that on for a little while and close out the session with that on for about 5 or 10 minutes. And that's live charts on a 1 minute time frame and so forth. So you can check that out if that interests you at the end. And I just want to thank everybody for being here. All right, great to have you on board here. All right, well, let's get out of here. And first thing I want to show you before we get going, please also type in any stocks you want me to look at in caps. Okay, so it's easier for me to see that. You do that right in the comments area. All right, so when I look at a market, for those new here, I have a couple things on my screen. I'm using NinjaTrader today for this. So NinjaTrader is a charting platform, and we've been using that for a long, long time. And on as you can see here, I've got some colored columns and rows up here. This is our scanners working, and we have the trade confirmer, the Elliott wave scanner, the turbo scanner, and the multiple time frame analysis scanner. So those are all working all the time. And then I have charts below it, and I have 3 charts. And all 3 charts are of the same symbol. And this is called multiple time frame analysis. So on the far left, I have the 60-minute chart. This gives me the short-term look at the market. I have the daily chart in the middle for the intermediate term and the weekly chart for the long term. And the reason I do this is it really helps with timing trades. So if I see something really good and the time frame, my primary time frame, which is the daily chart in the middle, looks good, I like to look to the left to take a look at the short-term trend and see where I am in the overall trend on the right. All right, so that's the purpose of it. All right, so I've got the crypto ETF called GBTC up right now. And, you know, we had initiated a long position thinking that this would go up, and our stop was here, and boom, with the bankruptcy or the filing of bankruptcy for FTX, and you had the CEO Bankman there resigning. What a mess, okay? And of course, that imploded the crypto market, so we had to leave. The nice thing is that when you calculate your trade size or position size before you take the trade, you're not risking too much. You're only risking a certain percentage amount that you are willing to lose, and that's exactly what we did in this case. So a good lesson for all traders: don't bet the farm. Always calculate your trade size. So if the trade doesn't work, you get out at a calculated stop. And so we're out. All right. We're not recommending it at this point anymore. We'll see if things change, but that's the way the cookie crumbles sometimes. All right. So the other one I wanted to look at here before we get going, and go ahead and start typing in any stocks that you want to take a look at. We're kind of liking gold right now. All right. So I initiated a buy on gold earlier this week. And let's just take a look at it. We had a long move down here. All right. are pyramid trading points that take a look at certain trend trading patterns in the market, along with fractal analysis and momentum analysis. All right, the last one was stopped out. So that basically had a nice short trade, but no longer. Okay, we're moving up. We've got green momentum. This is what we call the owl indicator. That's green. PTF is neutral. That's okay to go long and short on here. On the shorter time frame over here on the 60, we've got a green owl and a green PTF. So that's giving us the signal light. We have a green PTF here, and the weekly chart has the momentum has not turned positive yet, but it's starting to work its way towards that. So for a nice early entry, this is a go. So I'm going to put gold down as one of the ones that I like right now. I don't think it's too late to get in, because we're thinking this could be now a major move back to the upside and eventually take out the all-time high sitting around just below 200, and we're at 164. So we'll like it. I'd put your stop as low as you can. All right. Another strategy is if you want to wait for the pullback, because most of the time you do get a pullback, you can wait for that for a better entry if you want to. We got in a little bit earlier than you guys, but that's where it's at right now. And so I'm liking gold. All right. So I put gold in the buy list. And if anybody else is in gold, please let me know as well. All right. Silver. We'd like to get long on silver, but I got to tell you, silver, we got this nagging red PTF down here. Okay. On the daily chart. And basically that's when that's red, you find the lowest price in the red area, which is way over here. That's what where it started. And it's basically with a 75% probability saying, you know what? That's not a bottom. So we've got the correction now into a retracement zone. Are we going to get a sell-off? Well, according to this indicator, yes. So we're staying out of silver for right now. If things change, if this indicator abruptly turns from red to green, that changes everything. But right now, currently it's red. So I can't recommend that one. All right. So that's kind of, an important one to take a look at this point. And also the final one today, before we start getting into the stocks you want to take a look at, and go ahead and type those in now, is USO. USO is the oil ETF, and we're liking this. We think that there's a bottom in here on oil. We've got a couple bullish pyramids here. You want to keep that stop all the way at the bottom for right now. Once this heads up and goes above this previous high, then we'll start using the pyramids for our stops. But this is looking pretty good. However, okay, let's wait until this turns bullish before we actually put this on the buy list. So I can't put this on the buy list today because it's still in this kind of movement of volatility basing here. So let's take a look at this next week. USO is not on the buy list. If you are already in it, make sure that stop is down here so you can survive any volatility. All right, let's take a look and see what you guys want to look at here. Okay, so here I'm going. All right, so Aggie's saying, would it not drop to fill the gap in your first chart on gold? Let's take a look at gold here. Anything is possible, Aggie. Anything is possible. That is why I suggested either, a better earlier entry would have been here. Okay, so you're forced to put your stop here. So here's a couple of ways you could play this. You either wait it out, all right, wait for the pullback and then go in, or you could use an option. All right, definitely you could use an option here. Usually when I get in late on markets, I do use options. But if the target is almost $200 for this, and we're sitting at 164, and the stop is down here at 115, that's a 14-point gap, right? But the target is a 2-to-1 profit. So it's still technically, from a risk to reward standpoint, not too late to get in. So you'd be okay with that. It would just be a smaller trade size because your stop is so far away to allow for that pullback. So I'm going to let each person decide how they want to do that. Wait for the pullback. You'll probably get one. Or if you want to go in it now, not to miss any more of this up move that we're in, you could do that as well. So that's kind of a situation that's going to be based on how large your account size is, and if you're able to put your stop at the very, very bottom. And if you can't and you still want to go in, use an option. Okay. All right. So let's keep going here. Good question. All right, Stuart. Welcome, Stuart. All right. So HPQ. Now we looked at this one last week. Okay. And let's see how this is cooking right now. So the overall markets today are down 252. Okay. But certainly most stocks have bolted up with the huge move up in the markets yesterday. We see that even in a bear market, you have huge moves that are bullish at times. And I think that's what we saw yesterday. So on HPQ, what we were watching here, Stuart, last week is we had a movement down here, and we were looking for a zone for this thing to bottom and then move back up. And notice where we drew the fib retracements. That's these two blue lines here. It hit that, moved up. We got a pyramid. We got green, no red anymore. We had a little red back here. We have green here, no red here. The only red is on the weekly chart, and that's kind of like an aircraft carrier. That's going to take a while for that to turn green. So if you want an early entry, you use the daily chart. And at this particular point, that's a go. Okay. So this is not a bad one. The target on this would be a fib extension. So let's open up this chart here. And this is a 3, not a 5, because this owl here is bigger here than here. So you only have the biggest owl on the top of a wave 3. And so that's what we have there. So now the next question is, what's the target? If you want to go in this, you got to know what the target is, right? So let's go into the drawing tools, grab the fib extension, draw it from here. Let's go up as high as we can, about there. Let's see. That's not what I want. All right, fib extension. There it is. Okay, here to here to here. That's about it. So let me just get that a little bit better and get this a little higher. Lock that in there. Okay, so we're looking at probably 39 to 48. Okay, I would imagine it would break the high here. So I'm thinking probably around 43, 44 is the target. We're sitting at 30. Okay, not too bad. Again, let's see if we've had that big pullback yet. And let's open this up real wide like this. Now, you had a little bit of a pullback here, but I'm looking for something a little bit bigger. Usually after that first break off the bottom, the market tends to want to come down and test to see if this is the bottom. So sometimes that big pullback can almost form a double bottom. So you have to have that stop far enough away in order to survive that. So keep that in mind. But yeah, I think this is looking pretty good, Stuart. Okay, I like it. And let's put HPQ on the buy list for right now. And again, you could always use an option for this as well. All right, so that's HPQ. Let's take a look at CE here and see what we got cooking on this, and then we'll take a look at Nike. All right, so CE, let's let all the charts load. All right, so we're seeing a pretty sharp move up. We've got two price bars that are pretty bullish now. The only problem is this. All right, got to wait for this to change. If this goes to green, then we'll probably be in a pretty good shape here to go long. But I'm not going to issue a long trade on this until it does. Okay, so that's going to keep us out. So looks like according to that indicator, this move up is only a brief correction, and we should see more selling unless it changes to green. Then it's going to basically void out any short analysis, and it would be a long at that point. So let's take a look at that next week and see if it's changed or if the market has pulled down. All right, on Nike, let's take a look at Nike here and see what's cooking on that. And let's see, Nike, give that a second to load. Same thing on Nike. Check this out. All right, bullish on the short-term charts, but you've got that pesky PTF again on the daily chart right here. All right, so no trade on this. We would have to wait. Okay, basically it's saying the bottom is not in yet. So we're not going into that until that changes. Now, if it goes down and makes a new bottom and it goes to yellow, hey, great. But if it abruptly turns to green, then you want to consider a long trade at that point, either or. Okay, so you got to wait that one out a little bit. All right, so that's Nike. Adam is here. Hello, Adam. CVS. Let's take a look at CVS here. Okay, so let's see. All right, so the weekly chart on the far right is kind of pretty clear here. And it looks like we have just finished some form of a top here. And this is kind of interesting. So we've been coming up for some time. So notice we had a pullback here. So I think the longer term charts are down. all right, because they couldn't take a high out on that last pull-up. That concerns me a little bit there. And now we have bullishness here, which means that we should get above this price at about 107. All right, so we're still going up. So I think on this one, I'm being a little bit reserved on this one of whether I want to go long on this or not. Let's just see first before we do anything if this thing has hit the retracement target zone. So let's see what we got cooking on this. I'm thinking right about there to there. Just barely hit it. So that's actually a good sign. That actually makes the analysis even tougher because now it has technically hit the retracement zone. So you kind of want to be a little more aggressive on a long trade here. So, all right. So I guess basically, possibly you could take a long trade. I usually like to get it a little deeper into the target zone over here on the right, which is kind of making me a little skeptical in this one. All right, but no trade for now because with the red owl on the 60-minute chart, this thing is pulling back still. So let's see how far this pulls back and see if this bottom holds and we get a turnaround. Then boom, I think maybe that might be the place to buy as long as this is green, this remains green, this is good here, yellow is good here. If this turns red, then we got to wait for that also. So it's in a pullback now. Let's see what happens with that pullback. Is it going to be a strong pullback? Is it going to take out the previous low? I don't know. All right, nobody does. So let's let the market tell us what it wants to do. And until then, until the momentum turns more bullish on the lower time frame, we stay out of this. Okay, so that's CVS. All right, Starbucks, SBUX. All right, give that a second to load. All right, a couple things I like about Starbucks here. All right, I don't see any red on the indicators at the bottom, okay? The ones we look at, the owl and the PTF. So yellow is okay to go long or short. That's green, yellow, green, and this is green too. So a lot of bullishness being shown on all three time frames. So that's a good thing, all right? So this probably would have been a better trade a little earlier on, okay, in this area here. So this can be your stop here at this point. You just took out this high. So if we're at a bottom here, okay, and then we're going to move up, then you want to put that stop. You don't want to miss this. So you do want to go in. So Starbucks is pretty good. I like it. Let's put that on the buy list for right now. All right, with a target above the 130 mark. Okay, so I don't think that'll be a problem. And I think the risk to reward will be okay. The only issue of risk that we take on this is if this is not done coming down, then we've hit the point of inflection. So if it's going to make another low, which is always a possibility, it's going to turn around pretty soon. Okay, so one of the other things you could do is you could wait for the next pullback and see if this bottom holds. And if it does, catch it on the turn up, okay? But all the tools that we use and so forth and analysis are indicating it is a buy. I probably, again, want to put that stop right, not at the very, very bottom in this case, but right here, okay? And of course, you could use an option for that too. So that's Starbucks SBUX. All right, HD, little Home Depot here. Let's see what that's cooking on that. All right, so... All right, so we drew in a point of inflection last week on Home Depot, all right, to see what would happen when it gets here. Okay, so it's coming back up into that area. Notice, this is what I'm talking, this is a great example. So here's what a potential bottom looks like. Here's that first move up, and look, see the second move? That's your double bottom. Okay. So when you get in here on a market, this is why you have to put your stop at the very bottom on the initial breakout. Now, once we get above here, okay, then you can start moving your stops up closer. But after that, a first initial sharp move up off a bottom, you've got to be careful on your stop loss placement, because if you put your stops on any of the points here on the way up. You're probably going to get stopped out on that pull up. Doesn't mean you won't make a profit, but the idea is you're going to not survive the pullback. So there we have it. So I see no red here. Let's put Home Depot on the buy list today. All right, and looks like it's going to be okay. All right, so I think the target zone on this is well above the 420 mark, and we're at 314. So I think it'll take out the high on the next big move up. Okay, so that's kind of where we're at now on this. It could. Now, the other problem is it could go up a little further and drop. So always use a stop. Okay, so that is Home Depot. All right, let me keep going here. All right, William, how you doing? SAIC, SAIC. All right, so this one has been moving up on the daily and the 60-minute. All right, and looks like we're making a new high. The next correction, okay, on the weekly chart, when this thing finally ends, this basically is saying when this pulls back again and finishes this move up, we're probably going to go pretty low below here. That's what this PTF is saying. So, you know, a big correction is in the works for this at some point in the future. But for right now, it's a move up. I'm not going to put it on the buy list for a variety of reasons. It's gotten too far up. All right. We will get a pullback. Let's look at it next week and see if we get a pullback to the inflection point, which would be right about here, right around 100, maybe just a little under. We have bearish divergence on the 60-minute chart there. We do have green here, so probably another high is coming short term, and we have green on here, okay? So it's looking pretty good. The only thing that's kicking it out as a buy now is let's wait and take a look at that after the pullback, because it's getting a little bit too far out there, and the 60-minute chart says it's due for a pullback. So let's put that on the hold list and be sure to take a look at that next week and see if it's pulled back. Let's take a look at your next one, CAMT. All right, this one is looking pretty good here. Okay, now this is nice, okay? This is, when you ever hear me talk about something clean, let's open up this weekly chart, all right? This is a huge impulsive wave up. Look at the hyperbolic movement of that wave. All right, there's no way you can look at that and not see the steepness of that wave. Usually a wave 3, okay, at this time. And if this pulls back and goes further here, then that is not a 3. That would be a wave 1. All right, and then you'll have 2, 3 that way. So you really never know unless it starts exceeding its retracement. So let's take a look at the retracement. So let's draw a normal fib retracement into this and kind of get a feel for where that would be. And I'm going to say right around here is where this trend started to pick up. So notice it has ended so far perfectly in that area. So the way I draw fibs, all right, 70% of the time, they end between these two blue lines, which is 38.2 and 61.8. 15% of the time, they're a little shallow, and 15% of the time, they exceed the high probability area, but should not go into the top of wave 1. So if you're an Elliott wave person, okay, that's kind of what we're looking at for the count, which means wave 5 should commence. The question is it commencing now? So let's take a look at the lower time frames and see, and it's getting darn close, I would say. What I like about this is notice the bullish divergence in the owl that measures momentum. Big move down, basing here. We're starting to see the lower time frame turn green. So this one is one of the best I've seen, but I cannot put it on a buy list yet. And it's so close. It could be days away from being put as a buy. And the only thing I'm waiting for here is this to turn green. Okay. And we're about a day away. All right. So I'm not going to put this on the buy list yet. As soon as this turns green, it's a buy. And again, the stop's got to go way at the bottom. All right. And you can use options, I'm sure, on this as well. But the risk to reward is great because the profit should be, you know, way above 60 on this. Okay. So, William, that's a great one. Let's please come back next week and remind me to look at this again and let's see how that owl is. If you're using our software tools, okay, definitely be looking at this every day and wait for that owl to turn green on the histogram. Once that turns green, it's a buy. All right, so good. All right, let me just keep going here. All right, Augie, say if you were using options on gold, as example, would you go the strike prices with deltas of 50 or over? Well, you know, the software, Aggie, there's great software. One of the ones we use is OptionsPlay. Okay, so let me put a little plug in for them today. OptionsPlay software is very, very good options software, and there's a link for that. And I think you know, of course, you're one of our clients. So there's a link in the client support area, you know, the client VIP client area, where you can access that software and get a discount on it. So definitely check that out, and it will tell you what the best option is to buy. And it depends on expiration date, your strike price in relation to, is it in the money or out of the money? And of course, that's all going to be an important play, and your projected target. So it just depends. Okay, it depends on what you're trying to do with this. And then, of course, you can also do more complex option plays like credit spreads, debit spreads, and things like that. And that software is geared to do that as well. So usually what I like to do if I'm going to buy a simple call and it's a bullish call, I try to get that delta as high as possible. And that's what the software does for you. Okay, so check that out. All right. All right, let's see what else we got here. Key is saying, are you using the owl to locate wave 2 on the fibs? Sometimes, but not always. It depends on the price structure. So for example, I mean, you know, it's sometimes the waves are very clean, sometimes they're messy. So during messy times, the owl may oscillate a little more to make it a little bit more confusing about where a 2 is. So always use price structure. All right. And what you do is you take a look at the first major pull up and then look at the next major pull back. And that's usually your wave 2. All right. So always look at it that way first. And then if it's nice and clean, orderly pattern, you'll probably see the owl. Sometimes it goes red, but sometimes it doesn't. Okay. So you really need to look at price structure on that. Now for wave 3, that's where the owl shines. Okay. So that's where you want the wave. That's why we basically make the owl showing wave 3. All right. My pleasure, Augie. All right. Anything else? Did I get them all or did I miss any? Let me know, of course. Okay. Hope I didn't go too fast. All right. One of the things a lot of people say is, oh, Ben, slow down, slow down. I'll tell you what happens when you get really experienced in this and you have all the rules internalized and memorized. It's kind of like playing a sport. You know, you just do what you do without thinking about it. And so that's where you want to get as well, regardless of the tools you're using. You always want to know them and master them so well that you can look at a chart and literally in 20 seconds have that rule base internalized so you know you should be long, short, or out of the market. It's that quick. All right. Anything else here? Going once, going twice. I'll give you a minute. So far, I like gold, okay, HPQ, StarBucks, and Home Depot, HD, all right? And then, what was it, CAMT, I think, was the one that I like, but yeah, CAMT. I like CAMT. I'm going to write that down on my end too, and make sure I watch that one because that's close, okay? That's a nice one too. All right, that's the one we're looking at here. All right, now, if there's no others for today, then let's check out maybe the futures market, see what's anything's cooking there. Oh, JBL. Okay, good. JBL. Let's take a look at JBL here. All right. You know, sometimes when you type them in, there's a little bit of a delay by the time they get to me, you know, so just hang tight on that. All right, let's check out JBL. Okay, so we've got a fairly nice move to the upside underway. I don't see any red anywhere right now. Okay, on the current price structure, I do see a pyramid here to the upside here as well. So it's looking pretty good. Next thing we got to do is see, all right, exactly where the target range is And let's see first, let's open up this weekly chart and let's kind of take a look and see. So if you go way back in time, all right, we've had a big move up here, and then look at how dormant this was. Oh my God, it's like a decade of dormancy, right? Now it's pulled up and it's come out of here. I think looks like it's broken this. So this is kind of a big deal, all right? Now, doesn't mean you can't get a move down before it heads up. And we've been heading up for quite some time. So you had a big move up here, but then it came back down already. So that's pretty good, but it went lower than that, but it didn't go lower than that. So this kind of makes the analysis a little bit more tricky. Let's just draw in some fibs and see if this little pullback, let's go right about here. So it hit the fib target area. That's a good thing. And you're going to say, well, why did you pick this point, not this point? Because this, to me, on inside this wave, that's a 1, 2, possibly the 3, 4, and 5. That's kind of what I'm looking at there. So that's kind of not too bad. Let's see where the target is. Now, the target is going to be based only on this little move here. So we're looking short term or basically on this long-term chart to get to 76.56 or 92, right in that zone there, before we'll see the next pullback. That's basically what we're saying. So if we went in long here, put our stop here, the risk to reward's not quite there, unfortunately. So that is probably one that's shaping up to be a valid long trade, but I don't think the target's going to be high enough for us to make that trade because we like the risk and reward to be in our favor by 2, okay? 2 to 1. So I guess I would pass on that for that reason. But I don't think if you're in it already, stay in it, okay? It's definitely a valid long trade, but it's not one I'm going to put on the list because it fails the risk to reward. All right? But thank you for sharing that. That's great. Anybody else? Anything else? Going once, going twice. All right, so we covered gold, we covered USO, we covered crypto, okay? That imploded. Don't go short and don't go long on that. Just stay out of crypto right now. They've got a whole set of unique problems. All right, well, let's run over and take a look, why not, at the smaller time frames and see what we got cooking over here. All right, I'll juice those up here. So this is, you know what, I run a day trading room. You probably all know that already. All right, and in the day trading room, we trade a variety of different futures markets. We do not day trade stocks. All right, it's basically futures. And we usually focus on the micros because a lot of people like the micros. And we trade the Dow micros with the NASDAQ micros, the gold micros, the S&P E-mini micros, and the oil, crude oil micros, and the Russell micros. So that usually keeps us busy. That's a handful of futures that usually keeps us busy. Okay, so here's the M&Q on a 1-minute time frame. All right, bearish right now. Okay, nice entry here. Okay, if you were to trade this, you would have been short there, and everything is red. Okay, except for this now. So we're going to get a bit of a movement back. So the stop would be, you know, basically, we basically have not had a big move back. So you want to keep that stop up here. All right, for right now, and then drop it. So when you get in early, like off this first pyramid, you can keep that stop at the top very easily, okay? Let's take a look at the MES. That's probably not going to be too much different. All right, same type of thing. We're in a rebound here. You can expect this thing to go to the inflection point, all right? Now, we do a lot of scaling out when we day trade, and a lot of that scaling out is not only signals, but using profitability statistics. And what that means is that we know that we've been trading these markets so long that when we reach a certain profit, statistically, we usually get a significant rebound after that is met on these time frames. And so when we are met there, we usually start to scale out pretty heavily based on that. So we lock some profits in, let it pull back, and then we can either re-enter the position at that time or not. So that's kind of, you know, a little insider tip there. All right, so same thing on this. Let's take a look at crude oil. Crude oil is great. It's either quiet or it moves, and here it's moving. And again, your entry is much higher than it would be now. This is already underway, okay? So this is already moving. All right, we had a top in place here, so it's coming back down. And you got red here. So, your stop on this, we probably would keep right about here now, okay? Simply because so much profit right now. So that's where we'd be with that. M2K is going to be another equities market. So that's going to be kind of similar to the NASDAQ in the E-mini bearish. This is interesting, though, the PTF on the 5-minute chart. So this is the 5-minute chart. This is our whopping long-term chart. This is the 1-minute chart. This is our primary chart. And believe it or not, the 15-second chart. And you would be shocked at, when we deal with these very small time frames, people say, how do you do it? Isn't it too fast? No. Sometimes I have to wait like an hour for a trade setup because we're so structured in how we do it. If the rules aren't met, we can't make the trade. And literally sometimes, even on these short-term time frames, we have to wait an hour before the right setup is. All right, so this one here coming down, and basically with the owls, the PTF's all red on these lower time frames. Could get a point, pull up to the inflection point here, and then another drop. So basically, that's where it's at here. All right, let's take a look at gold. And gold is a bearish trade now. We're getting a pull up here, which is nice. All right, so if you missed it, okay, it's going to give you another chance to get in. All right, so based on, this is what we would call a scalp trade, because look how messy this is. Okay, no Elliott wave here, just it's a mess. All right, so PTF is saying with a 75% accuracy that we're heading below here. And so you want to have a short trade on, but you're having currently a bullish move. So if you did not get in here and your stop is not here, all right, then you have another chance now to get in. And basically you want to wait for this to turn red. So you want this move up to finish and roll over. So you have red here, yellow here is okay, red here, and you still have the red here. Okay, this may even go green for a little bit, but then it has to go back to red for you to take a short trade. This just turned green, okay? So now you can't go short until that turns yellow again, all right? So you got to hang tight with that one. So no trade on this yet until that rolls back over. If you got in earlier, your stop, of course, is up at the top. All right, so that's where you have to have that. All right, so let's, good. All right, Adam, let's go back to Twitter, okay? So that is a situation on the day trading area. And Twitter is a good one to look at, all right? TWTR, let's see how that's cooking. All right, so a little messy on the old Twitter, right? Okay, kind of up and roly-poly. Say boom, boom, boom. Again, the volatility that we've experienced in the market has been pretty extreme. And so stops too close are going to have a real hard time in this volatility. So you got to be really precise in where you put your stop. There's nothing worse in trading than being right on the analysis, but getting stopped out because your stop is so close, right? So you got to be careful about that. All right, so definitely it's in a bullish mode right now. All right, PTFs, we got no red on the PTFs, no red on the owls at the bottom, and we have a pyramid hit here, okay? So this is looking pretty good. And again, a little bit of a messy chart here. So my question is, where's the target? That's the problem with this. And I'm not sure. The only thing I see that's really clear for a target on this is maybe opening up the 15-second chart and maybe doing something along the lines here. Okay, so this is kind of bearish divergence, right? So let's just say, for the sake of saying, that we are in some form of a wave 3, maybe inside a major wave 3, but here we are in a wave 3. So we're going to have a pullback at some point. So, and then maybe more highs after that. So maybe something like that. So I don't think I would jump into this yet if I was looking at the 60-minute chart, right? So I would wait for the pullback on this. And let's kind of get an idea of where that pullback might be. Well, we grab our fib retracements again. all right, and kind of try to get an idea of where that pullback is going to be. And I, would draw it from there to there. So I think probably I would not enter on this. I'd let this thing, even if it goes a little higher, let this thing top out and then wait for the pullback and then reassess it. Okay. So I'm not going to put this one on the buy list because of the bearish divergence on the 60-minute time frame. All right. Thank you. All right. Well, I think I've gone through them all today. Boy, pretty good. We did it in 44 minutes. Not too bad today, guys. All right. Anything else? Anybody else? All right. Before I go, all right, let's just quickly go over the ones we like. All right. So gold is one. All right. So let me just open gold up. So there's gold coming off the bottom. All right. Now, a couple things you could do with gold. All right, it is a buy now, and the risk to reward is really good because it's going to get over 200 bucks if we're right. And so we're risking 15 to get to 200. That's a 2-to-1 risk to reward. You could do an option, or you could wait for the pullback. And the pullback will probably also generate a bullish pyramid trading point. So I'll leave that up to you on how you want to play it. When they get away from you like this a little bit, kind of better to wait for the pullback or just use an option, okay, at that point. So that's gold. All right, HPQ is our next one that we like for this week. Let's type this one in here. And this is pulling off a fib retracement bottom, going into the next wave up with a target of 39 to 48. And there we are on that one as well. Okay, so that's looking pretty good. StarBucks, SBUX, is our next one. And StarBucks here, okay, we looked at this one. And so this one has a lot of green on it as well. Again, the only situation you got to be careful for is you will get a pullback on this. So you do want to make sure, of course, that you have your stop far enough or wait for the pullback. All right, Home Depot. HD is our final one. And this one here is moving off a bottom. And the only thing we have to be careful about here, all right, is the possibility that if we go back into the target zone here, we may see it faltering back down. So that's the only case. But if you're trying to reach a new top, then this one might not be a bad one to try as well. All right. Let's see what we got here. William's asking, is there some truth to that? If a wave 2 is simple, then wave 4 is more likely to be complex and vice versa. Yes. All right. That is a steadfast Elliott wave rule. And then you have to define what the word complex is, because there's different meanings to that. So complex can mean a complex correction consisting of more than a zigzag correction. So a zigzag correction is an ABC simple correction. Now, when you trade the Elliott wave and you're seeing a wave 4 starting, you always assume it's an ABC because you're never going to know it's going to be a complex correction until it actually unfolds. Now, you can look at wave 2 and see if wave 2 was simple. And if it was, then chances are the wave 4 is going to be a little bit more complex. But that does not necessarily always mean an ABCDE. It just may mean, okay, it could be a sloppy ABC that is elongated in time. So it takes a longer period of time than wave 2. So it's a little bit the definition of complex you got to be careful of, but it usually will mean it won't be as simple as the previous simpler ABC correction that you might have witnessed before, that kind of thing. Okay. All right. We did not look at Tesla. Let's look at Tesla right now. Okay. Take a look at that bad boy. All right. So Tesla here, okay, is one that has retraced back to its fib area. So we like that. So we're kind of looking for a bottom here, right? But if we look here, we're not at that bottom yet. So you can't do anything with Tesla yet. It's still unraveling. It's still moving down. So let's wait and see if this thing can turn around. And by that, I mean, let's see if the momentum turns. We get rid of the red PTFs. This is green. So long term, it's saying after this bottoms, we should see a big move up. So it would be a long trade. Okay, you're not going to be taking a short trade on this right now because it's already in the target zone. So it would be a long trade, okay, but short term, it's still moving down. So I don't think the bottom's in quite yet, but we're probably getting close, okay? So just hang in there with it. But I think you're going to have one more move, fairly significant to the downside at some point, okay? So that's kind of where we're at now. And if we look here, all right, you can see this structure. It's got bullish divergence, but we have a red PTF. So a little bit more of a low here can be expected, and then will maybe good for a long position. So let's keep an eye on that one, all right? I'm going to write that down as one to add to the watch list, but it's not ready yet, okay? It's not a buy, all right? GE, let's take a look at GE. All right, so GE coming off its bottom. Yeah, it's a little late. I do think it's pretty powerful. Look at this move up. You could have traded this on the 60-minute time frame. Look at that. Also, too, you got a pyramid trading entry here that you could have gone long in when the owl and when the PTF turned green, but your stop's got to stay here. So if we look at this, you have not yet had a major pullback, okay? And it is late to get in. You have not had it, all right? So it's going to probably go a little higher because you don't have much bearish divergence even here yet. But I would not do this until we get back, pull back. And so let's see if this bottom holds on the next pullback, and then I think you'll be able to get in at a better time, okay? But it is a nice trade. Now, if you're looking for a long-term trade, okay, and you don't mind just going in and having your stop way down here and not messing with it, then you could do that and just leave it here. But your trade size is going to be pretty small, all right, because the stop now is so far away. Options could be another way to do this, but personally, just wait for the pullback, okay? Good one to look at, Key. Thanks. All right, well, I guess that's it for today. All right, I want to thank everybody for coming today. You guys like this format? Is it pretty good? Does it help you? Kind of fun to kind of look at, see what everybody's looking at and pick up a few opportunities for ourselves, isn't it? Not so bad. All right, so I do record these, and the recordings go on our channel here, so you can always come back and look at those if you miss it. And I also try to always put a timeline on the recording, so you can actually go to a specific area that you may be interested, or a specific stock. So for example, I'll have GE at a certain time when we started looking at that, and it kind of makes it nice to go in and out of there. One of our viewers suggested I do that a couple months ago, and that's been a great thing to do. I think that helps a lot. So we'll be back on next Friday, and I'll also put some links in the recording too. And again, I want to thank everybody for being here. And as Gene says, give us a like before you go, okay? Give us a like before you go. All right, everybody, have a good weekend. We'll see you back next week. And remember, always use risk control.